Well, the intraday chart of the Nifty comes up for you, and that tells you the story of the day. You know, at lower levels, we are seeing a fair amount of support. Then there was that move on the way up, and last half an hour, the market's done virtually nothing. So it's flat, an up move, and then flat at the upper end of the range. In fact, we've come off a tad from the highs of today's trading session. Nestle India, that's the one that should come up for you. Off highs, we've seen some sell-off in the FMCG pack. ITC has a heavier weight out there, so that's the other stock which is currently trading lower. HUL2 is mildly off highs. The market still meandering around the upper end of the range. But let's talk macros then. The lower than expected inflation in December has slightly increased chances of RBI not hiking rates in the upcoming February policy. But the majority still expects a hike. This is as per CNBC-TV18 poll of economists and bankers. Latha has more on that. Latha, are they going to dance to the Indian inflation tune, or what happens in the US?
Well, primarily the results of the poll itself. 20% of the respondents only said that in February there may be a pause. And of these 20%, they said that they were already sitting with a pause. At least half of them said they were sitting with a pause. This has only strengthened. The December numbers have strengthened their feeling that the Reserve Bank will not hike. But the important point is 80% of the people polled are expecting a 25 basis hike. The 80% of the people whom we polled also expect, this is a separate 80%, of the people polled also expect the February hike to be the last hike in this cycle. They think that 6.5 will be the top, will be the terminal rate. But there is a 20% which believes that there is still a possibility of yet another hike and the peak coming to 6.75. The Reserve Bank will be data dependent. About 30% expect the stance to get tweaked. You know, in February, there will be a hike, but the RBI may tweak the stance to either indicate neutral stance or to say in some fashion that April onwards we will not hike or we will be data dependent. But some such a dovish tilt is expected by quite a few people. Now, what led to it? The December number coming below expectations was one reason. The other reason is the US data also coming in line or in slight areas even below expectation. The feeling is that there is no pressure on the rupee now. With a combination of dollar becoming weaker, dollar index becoming weaker, crude, rather remaining towards the $80 mark. Remember, all of the RBI forecasts are predicated on $100 per barrel cost of crude. So for a whole host of reasons, the expectation is that a softer RBI or a monetary policy committee in the February 8th policy cannot be ruled out.
Okay, all right. Thanks a lot for that, Latha. Well, let's get in with